and Ethereum emergency update. We are fast approaching this key all-time high resistance zone. If we break it, we're going to have price discovery. But are we going to get a micro rejection or a bigger rejection? Well, that's what we're going to look at in today's video using Elliott wave and Fibonacci objective, non-emotional analysis. If you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the award-winning, the best-selling, high-probability trading strategies back in 2008. Author is Robert Miner, one of the best technical traders on the planet, one of my mentors. Amazing, amazing, amazing stuff with Elliott wave and Fibonacci. But today we're going to focus on crypto. What is Bitcoin doing and what is Ethereum doing? So let's dive straight in. So we did a video on Bitcoin and Ethereum, top 5 Monday we did. And this is Ethereum. I want to look at Bitcoin. Where's my Bitcoin? Here we go. Bump, bump. Right, this was Ethereum actually. Let me just zoom back over here. We want to go into Bitcoin. What we said with Bitcoin at the beginning or the end of last week is we should anticipate a high being made in this zone, and here's the previous all-time high. And we've got this nice structure going on. So we're going to look at this wave structure. And when I say wave structure, Elliott waves allows us to read the psychology of the market to see what's likely, never guaranteed, but what's likely to occur next, so we can always act with the edge in our favor. And we're going to use Bitcoin and Ethereum in terms of to give us more clues, because we're looking for objective information that can help us. So now with Bitcoin, there's a couple of things, right? We need to be really clear on. This is not a typical wave 4, right? From an Elliott wave perspective, right? We put in a wave 4 here, but this is very impulsive. But sometimes the crypto markets are a bit unusual. Elliott wave pattern has been much cleaner. We want to use that information as a clue. So this is with a pinch of salt. But what is clear is if we zoom in over here, this is very clear, right? This over here, we've got this very nice movement to the upside of a 5-wave sequence. Look at this, 1, 2, 3, 4, 5. Textbook Elliott wave. Very easy to project, very easy to kind of predict the top of this. Then we have a very clean ABC correction, ABC correction. That in itself is textbook Elliott wave. Right? If you've been watching my previous videos, we were kind of analyzing this and seeing this happen as it unfolded. And if you haven't already, take my free Elliott wave and Fibonacci masterclass, which teaches you this in real layman's terms, because sometimes it can be very complicated. What do you anticipate after an ABC correction once we saw this high got taken out over here? Well, it's a further 5-wave sequence. And that's what we're going to focus on today. What is likely to occur short term, medium term, and slightly longer term? And there's a couple of scenarios, but we want to look at objective information. So you've noticed that I've written here a 1 or an A, because we don't know if this is a correction and we get one more leg down, or if this is going to be a continuation, but there's key information that will tell us those things. Here we said 2 or a B. Why 2 or a B? Because wave 2s and wave Bs almost look identical. But what we can see here is we've got this nice wave up to the upside. So as an absolute minimum, one of the best risk management strategies is to ask yourself the question, what is the minimum that the market should do if I am wrong? Right? If I am wrong. Now, typically, more often than not, a wave C, this wave here, is more often than not a carbon copy of wave A. And you can see that's what this red line represents up here. It's a price movement. This is a very key resistance zone for Bitcoin, not only because of Fibonacci, but if we just zoom out of it, it's also the all-time high of, was it April? April, right? With the 64,000 range. This is very key over here. We've got a 5-wave sequence, 1, 2, 3, 4, 5. We've got this resistance zone over here, and we've got 100% of wave A in this zone over here as well. One other thing we can do, if this is a 1, 2, 3, 4, 5, a top of a wave 5 is typically measure wave 1 to 3, projected from 4, and a very common ratio is 62%. And you can see there's a cluster in that zone. So this gives us very massive significance. There's a few other factors as well, but we want to keep things really simple. We do want to take into account the weekly momentum in the top left-hand corner. It's still bullish, still pointing up. So the overall trend is up. And we want to take that, that's really serious information. We need to take that into account. So that's bullish for Bitcoin. So we should anticipate more sideways to up. However, on the daily chart, the momentum is also bullish, but what I would suspect will happen is we'll get an early bearish reversal. This will lead to what's called divergence, where the price is going, the momentum's going down and the price is going up. And then a minimum we should anticipate is a 50% correction. Now, we're not talking about a big correction to the downside, we're talking about 50%. And then we're going to get one of two things. Now, I'm leaning on the fact that the momentum is still bullish on the weekly, is we'll get a correction and then a really strong break, like smash through this. Very, very important. Doesn't mean it's going to happen, it's just likely to happen. Why? Well, when I'm looking at this wave structure, right, if we're just looking at this part here, forget what's happened before this part here, is this to me looks like an initial wave 1 of a wave 3. It's either going to be a completion of a wave C and then a big correction, or a wave 1 of a wave C. So I'm leaning on the side of a wave 1 of a wave C, anticipate a wave 2 of a wave, sorry, not C, a 3, and then a wave 3 of a wave 3. And a wave 3 of a wave 3 tends to be very, very bullish. Now, looking at this information alone, there's a few question marks, but leaning on Ethereum, which we're going to go into in a second, it helps us see the structure of Ethereum, which tends to mimic Bitcoin, and it gives us a few clues. So I'm leaning on, again, you have to have an opinion of the market. We are forecasting a little bit here, but I'm basing it on decisions. If we do get a rejection at this point here, let's just say this does become the top around this region, what we should anticipate is a 50% correction as a minimum, regardless of if it's going to go lower than this point. 50%. Again, I'm just kind of giving some ballpark figures here because we need more data. And then how long it should take is normally 50% of the impulsive movement. So all we do is do this time. This is very powerful, by the way. Okay, this has not been confirmed as in this high, so take this with a pinch of salt. I'll show you what would confirm it. A confirmation, the first real signal of a confirmation will be any movement bigger than any previous correction. So this correction here has moved this much in terms of price. We want to see a movement bigger than this. That would be the first major signal. If price goes below this point over here, it's an overbalance of price to the downside. So we should say we got at least a short-term correction, and then that correction should complete no earlier than the 30th of October. So we're talking about 2 weeks, right? 2 weeks of sideways to down potentially. Doesn't mean it's going to happen. It just means it's likely to happen. And then this may turn out to be a wave 2 of a wave 3. And then quite simply, I'm going to just do this thing before we move into Ethereum. Right? And the reason I'm leaning towards a continuation of the bull trend here is because the weekly momentum is still bullish, right? The weekly momentum is bullish. So we want to take that with serious consideration. And then a wave, in fact, I've done this before. We got this red line here. A wave 3, a correction is typically 100%, and we're at that zone now. But a wave 3 is 1.6 to 2.618, right? So then that's our next price targets after the correction. And we can say this with a lot of clarity of the next resistance zone to be aware of is 77,000, just under 78,000, and then 100,400 in that region. So again, got this nice potential correction in this zone, and then a continuation of a wave 3 of a wave 3, right? Very, very important. Wave 3 of a wave 3 to complete the zone over here. Hopefully that's making sense. We're aiming to always be objective. If we do break this high, this 64,000, we're in price discovery zone. The last time that occurred was when we broke this high over here, this 2017 high. We broke it in, if I just get rid of this indicator, we broke it in around, it was November 2020. And once we went into this zone here and was doing new price discovery, the whole market, there was a lot of money flooding in. Down here was corrective, and now we're probably going to see that happen again. Now let's just jump into Ethereum. So Ethereum, very similar, like I did the video on Monday, very similar structure. A wave 1, a wave 2, and then we got this sequence. Now, the difference with Ethereum, however, it's just a nicer, cleaner, from an Elliott wave perspective, is a much cleaner wave 4. This is much cleaner A, much cleaner B, and a much cleaner C of a wave 4. Still got a question mark there, and then a continuation of finding that wave 5, unfolding as a wave 5. So this, to me, looks like a much cleaner, much clearer. Again, weekly. Let's just jump into the weekly. It's still bullish, similar to Bitcoin. So sideways to up for 3 to 5 weeks, 3 to 5, maybe even 6 weeks. And then we go back into the daily chart. What do we have here? Well, we've got this nice movement to the upside of 1, and then an ABC of a 2, and then we've got this nice 1, 2, 3, 4, 5 wave sequence. Well, what does this look like to me? Well, it just looks like the initial wave 1 of a wave 3. What does that mean? Well, again, we're just looking for objective information that can help us. So let's just ignore everything other than this last wave. And then we can just see what's the typical wave 3 zone. What's the typical wave 3 zone where we can measure this wave 1, project it from what looks like this wave 2. And the most typical wave 3 zones is 1.618 and 2.618 of the wave 1, right? So with Ethereum, we've got these two price targets of 62,000, sorry, not 62,000, 6,200 and 8,300, right? Or 8,373, in that region. So what should we anticipate over the coming days? Very, very simple. What should you anticipate after a 5-wave sequence? And this is a pretty clean, 5-wave sequence. 1, 2, 3, 4, 5. We can project with high probability what a typical end of wave 5 zone is. Again, if you haven't seen my Elliott Wave and Fibonacci masterclass, the free masterclass, it shows you how to do some of this stuff, and you'll see it unfold time and time again in identifiable patterns. And crypto is especially brilliant for following mass psychology, buying and selling behavior. Very, very important. All right, so we've got this 2 zones for a wave 5, 162% of wave 1 to 3, and we're approaching this 62%. We're in this all-time high resistance zone and this previous high over here as well. There's another piece of information that we want to have, which is this wave 1 and wave 5 often have a direct relationship. What's the direct relationship? Most common is the 100%, but the maximum is 1.618, again, in that region again. And then last but not least, we can do something called an external retracement, a wave 4 external retracement. This is more of a confirming indicator, and you can see is normally this range here. You can see the high is over here. So what we've got is this real multiple degree time frame price zone over here with this massive resistance zone, like an all-time high resistance zone. It should be a bit higher though. Bang, here. And we've got this high over here. So this is a very key zone for us to say we should see on the next bearish reversal on the momentum, where the blue line goes below the red. These are just probabilities, guys. Probabilities, no certainties here. What we're going to do is say if a high is made, we should see an overbalance of price initially. This is the biggest movement to the downside that we've had in this whole sequence. So we should see a movement bigger than this movement. When we see that, we can start doing our retracements. I'm going to do them early just so you get a bit of a feel. Let's just say the top was made already. We're going to go from here to here to give us a ballpark figure. 50% is the minimum pullback. 62 to 78.6 is the max. And then time typically takes a minimum of 50%. This has not been confirmed, so take this with a pinch of salt. But if it was the top made over the next day or so, we should anticipate sideways to down until the end of the month, until 30th of October. Very, very important. Sideways to down. But what we want to anticipate and be prepared for, especially with Ethereum, and I think not that Bitcoin will follow Ethereum, it's just that the price action of Bitcoin is a bit unusual, the way the correction of the wave 4 has occurred. But once we get this movement here, we've got this wave 1, wave 2, and then we should anticipate a big wave 3. But here we got a wave 1, 2, and then a wave 3 of a wave 3, right? And that's when we should, highly probable, see a clean, strong, confident break above the previous all-time high. Then we've got price discovery. Hey, we should know by now with crypto, especially with the FOMO, fear of missing out, panic buying, fear, uncertainty, and doubt, fear and greed. There's a lot of money that floods in because people don't want to miss the boat. And as soon as this new high here is taken out, this all-time high, panic buying would normally occur. So the wave 3 will tend to be overextended. So I would more push towards the 2.618, and then we should expect a wave 4 correction, and then an overextension on a wave 5, where we want to be prepared for a nice movement to the upside. So there you have it. Bitcoin, Ethereum, emergency update. We're reaching these high zones right now. We're going to be very, very aware of them, but don't be too alarmed if we do see a 50% pullback of that last swing, because that's natural, is healthy. We've just done a nice sprint. We need a breather. We need some recovery. There's some profit taking that occurs, and then it's the next leg up that we want to anticipate. So if you like today's video, like, subscribe, hit the bell notification. If you haven't already, take my free Elliott Wave and Fibonacci masterclass. You will also, if you end up buying one of my courses, which is on a huge discount, by the way, you'll get a private invite to my private Telegram group where you'll get premier access to our YouTube content. So, people like to have premier access, right? So let's finish on a quote today. We are going to stick with who we're sticking with today. We are with Confucius. Confucius on chapter 3. We are going. It does not matter how slowly you go as long as you do not stop. A key thing that I want you to know is, let's just say the bull market is 100% in time, right? However long it lasts. 80% of the profits will be made in the last 20%. So if the bull market was 10 months, for an example, in simple math, the last 2 months, which is 20%, is where 80% of the gains are going to be made. So all of this hard work, especially last 3-4 months when the market's been going sideways to down, should have been strengthening you. Should you hopefully been sharpening your axe, and you're gonna be ready to pounce. But then the last 20% of the market is where we get parabolic moves. If this is your first bull run, jump back into 2017's data, and you'll see the last 2 to 4 to 6 weeks, the price movement was just really overextended. But then there was a big retracement and correction, and we want to be prepared for that again. Like today's video, and I will see you very soon.